How we doing, everyone? Today is Thursday, August the 3rd, 2023. Just coming to you live. We're going to be reviewing some actual note deals that are available at this particular time. What we're going to do is kind of go through the due diligence process on how we make determinations, just trying to show people what is out there, what our process is when we try to find these deals. For people that want to fund deals, want to get higher return on their money, and just depending on how much money you have, there's deals in all price ranges. So that's what we're going to do this evening, and just kind of go through this step by step and see if these deals are good. So that's what we're going to do. So just bear with me 1 second. And also what we're going to do, if we have enough time, I'm actually going to review a seller finance deal as well. It's a deal where we can purchase either subject to or with cash. And then what we do is we put a seller finance buyer in the property and create two notes. One note we look to sell. The second note, in many cases, we try to keep for ourselves. So, if we get to enough time, we'll go to that one as well and see if it's a good deal. So let me share my screen. So this first, what we're going to cover first is a note that is for sale right now. You have some companies, note investment companies, different entities and private equity companies, things like that purchase bulks of notes. If if this is your first time, or if you don't know that much about it, you can go to my YouTube channel, Abundant Capital Group. And there's a series of videos. We started a training. We've done like 5 parts to the training. We're just going from beginning all the way through the process. And one of the things that we talk about early on is, where does the inventory come from? So one of the places that it comes from is note investment companies or larger private equity firms that buy these notes in bulk. And a lot of times they buy either first position or second position notes. What we focus on is first position. And so this is one of the websites that offers inventory. And what we do is, we go to these websites and we try to find, potential deals and see if there's anyone out there that may have the funds to fund the deal, or, we look to purchase them ourselves. So this one right here is in Louisiana, Pride, Louisiana. You'll see the address right here. And like I said, we're just going to kind of go through the due diligence process for selecting a note or looking at a note and seeing if it's something that's worth our time. And the reason why I'm starting with this one is, the first thing was the price. This one is only about $5,700. So a lot of times when people want to get involved in real estate, they, think that, I don't have that much money. I only have $5,000. How am I gonna, get a property? They may be a little hesitant when they do that. But here, you'll see that this one is offered at $5,700. So the information here is that the estimated property value is $205,000. Now, the remaining balance on this particular note is $11,560. So basically what you're doing is buying this note for $5,700, but when it pays off, it's going to be worth $11,560. So you would have essentially more than doubled your money if you were to collect all of these payments for, the remaining balance of the payments. This one is coming up on maturity in 2025. So we have roughly, just over 2 years. It's a 3-bedroom, 2-bath. It's in first position. And again, like we said, it is performing. Then there's some notes here that, the person that's selling it, wants you to know about, give you some information on it. These are the details, of the particular note, the interest rate on it and everything like that. So this will kind of give you a lot of the information that you're looking for when you're trying to figure out, is this a good deal or not? So the first thing that we do is look at the asset price. And when we go in here and, we put the address in, now we're just doing like a first level, surface level due diligence on this particular note. So we're just trying to see, is it something that piques our interest? Does it fit how much that we want to invest? Does it give me the type of return that I'm looking for? So we're just trying to answer some of those basic questions. And then there's a second level of due diligence, which, we'll cover in our training on Saturday. Well, not this Saturday, but one of the Saturdays coming up, we'll kind of get into the second level of due diligence. But, we just want to try and show people, some of the things that we do initially, so we can like at least make a decision and see if this is something that, we want to kind of go to that second level with, based on, what it is that we want to invest and what we're looking for in return. So this one right here through realtor.com, again, these are online websites that are giving the value of the property. So sometimes, you're not going to get, these values may not be as accurate, as the value of the property. So you want to take this information for right now, like I said, because this is the first level of due diligence. We're going to just take it at face value right now and say that this is somewhere in the ballpark. So right now he's saying that this is worth $209,800, and that's on realtor.com. If we go over here to Zillow, now Zillow says 118,400. So that's a big gap. So when you see a big gap like this, when it comes to the online valuations, well, I'm gonna just show you one other one. And then this one says 49,500. Okay. So when you see all of these different, wide variations in the property value, the first thing that should come to your mind is that I'm going to have to get what's called a BPO, a broker's price opinion, on this, so I can, have a better idea of what this property is worth. Now, worst case scenario, if this property is worth just under $50,000 and you're paying $5,700, that means you're at 10% of value. So even in worst case scenario, because of what your investment to the value of the property is 10%, well, just over 10%, 5,700 is probably like somewhere between 10 to 15%, of the value. That's a great place that you want to be. I'll ask you, would you buy anything that you knew had value for 10% of its actual value, or 15% of its actual value? I'm pretty sure everybody would say yes. Because if anything does go wrong with purchasing this note, you have an asset that is backed by a $50,000 value at worst. Now, again, we want to make sure and get a better idea and make sure that this $50,000 is not really 15. But I would doubt that, because we do see these other values over here, $200,000, and then this other one was like 118,000. So I'm pretty sure that the property is going to be at least over $100,000, if not closer to $200,000. I'm thinking it's going to be somewhere between $100,000 to $200,000. And then again, if you're thinking about what it is that I'm going to invest in this, $5,700, I'm pretty well protected. If the worst case scenario happens, that this person does not continue to make this monthly payment to me, I can get this property back in first position. So now I have an asset worth, close to, if not more than $100,000 that I purchased for 57. Could you not sell that property once you get it back for 15,000, 20,000, maybe even 50,000? If it is worth, somewhere between $100,000 and $200,000, of course. So right now I'm feeling really good about, the entry, on this particular deal. Now, again, we have to look at some other things as well. So we've got the property value. We know what the asset price is. Again, now we're looking at that relationship of the numbers, which I just explained to you. based on the information here, you're looking at getting a $249 payment each and every month for the next 2.5 years. Now, one of the things that catches my eye on this here is that the last payment that they received says May 5th, 2021. So that means that it's been 2 years since they received the payment. But they're saying that this is a performing note. So now I'm starting to question, is this really performing? But again, I'm not going to overreact to that because of what the property is worth and what I would have to pay for this non-performing note. Now, this weekend on Saturday at 12:30, we're going to go into a little bit more detail on how to do due diligence on a non-performing note. Last week, we talked about doing the due diligence on a performing note. So we're going to do non-performing this week, 12:30 on Saturday. So, but for right now, let's, this may be a non-performing note, even though it says that it is performing. But again, if it is not performing and I pay $5,700 and maybe have to put a little bit more money into it to get the property back, would I not do that for something that's worth between $50,000 and $100,000 at worst? I think that, that is something that most people will say, yeah, I could do that, because once I get the property back, even if I'm in it for, let's say, $8,000, $9,000, I can most likely turn around and sell this property, for a profit, for a good profit. Obviously, what the actual condition is and things of that nature, that'll be part of our second level of due diligence. Now, if it comes back that, the property is, even if the property is a tear down, somebody may pay you $12,000, $15,000, $20,000 for the lot. So a developer or somebody else can then go there and build a house that could be worth, $100,000, $200,000, what we think that the value of this property. They could build something brand new and it'd be more than what this property is worth. So even, if you just got the land back on this, you're probably in good shape of making, a pretty good return on your money. So for this, we don't have the property title. That would be the next thing that we want to look at. If this particular seller could get us, if they had run title within the last 12 months or something like that, we could get a copy of it. But in this particular instance, that's not some of the information that we have readily available to us. So, as we go into our checklist, we have to, then make sure that we go ahead and get this, property title, see when's the last time maybe somebody, ran it. If it was a couple of years ago, then we'll have to get that updated. And that part of it is on the second level of due diligence, not on this initial one, but maybe there's something that we can look at today, if they have it. What we also do here is go to this site, netaronline.com, and we put the address in and we try to go and look for the public information on it, see what we can find there. What's going on here? Okay, is this site down or something? Oh, there we go. Okay. So then we put in the zip code, which is 70770. And then what we're doing here, we're going to their county site just to see if we can, see the actual documentation, see if we can see the note. What type of note is it? What type of security agreement it is? Also, what we do, we look for the taxes. We want to make sure that the taxes are paid. So let's go. So the county clerk's office looks like it's subscription only. So we're not going to be able to see this right now because, this particular website just doesn't, you have to have a subscription, to this site or whatever to kind of get into the information, which is fine. For right now, like I said, for the initial due diligence, we just know that, we have to request to see the documentation in terms of the note and the security agreement. What type of note is it? What type of security agreement is it? Make sure that whoever owns the property is, in the property and making the payments and things of that nature. So again, we talked about the taxes. So let's see if we can see. Now this says online. So when it says online, it looks like I can probably find the tax information. So where are we at? Taxes? There we go. Information. So this looks like you're not able to get the tax information online, tax sale. Oh, pay. Okay, we can go to pay property tax and then we'll just see if it's being paid. Notice number, no. Parcel, we don't have that. Taxpayer name, legal. So it's not letting me search by address. And sometimes this is what happens when you go to some of these sites, some of these smaller counties, smaller districts, their technology is not up to, the level that some other counties are. I'll just say that. So we could very well just easily make a phone call to this office and just say, hey, I'm calling about this particular property. I'm just trying to see if the taxes are up to date and see what the tax, how much are the taxes on the particular property. Another way we could do that just to see what they are. Sometimes, Zillow a lot of times has that information. So here, taxes on this property are less than $1,000. This goes back to 2021, where it was $621. So I would imagine in 2 years, it's probably not over $1,000. But again, we've had to put on our checklist, let's just make sure that we call the county, the tax assessor's office, and just make sure that everything is paid. Because again, we did see that they may have not made a payment within the last 2 years, a little over 2 years. So it could be where the taxes, it may be coming up for a tax sale or something like that. So if we did purchase this, we would have to take that into consideration, that we want to make sure that that gets paid. So maybe if you have to adjust this purchase price, let's say, there's $500 worth of taxes from, the last 2 years that are still owed, we would then possibly want to adjust the price. But again, because if our value is what we think it is, I mean, would you not, pay the taxes, the extra $500? Now you're in the deal for, about $6,200, just over $6,200. Would you not do that? Again, it depends on how much money that you have and things of that nature. If you only have about $6,000, then that's not really an option for you. But you could say, hey, I got to pay these taxes. Can I get this for, $5,200? So you could do that as well. And they have the right to either accept or reject it. So again, proper documentation, we want to see that. That's not something that we can see on this particular one, just because of the website. We can't get all that information. So what would be the exit strategy? And we kind of talked about this, some of that. Worst case scenario, I get the property back. I could sell it quickly, to a local person. Me being in New Jersey, whoever purchases this probably doesn't live within 30, 45 minutes or an hour or something from Pride, Louisiana. You could just sell it to a local person. Somebody may want to buy it to live in. Some investor may want to purchase it to, put a tenant in there, rent it out, fix it up, do a flip, something like that. So again, we know that that is an option. Also, when it comes to exit strategies, we always want to have more than one. We want to have about 3 or 4 exit strategies. So what would be the next one? Depending on the condition of the property, Um, you could put a renter in there if you wanted to do that. That's not one of the things that I recommend necessarily. I don't particularly like the rental model. I would want to use that as kind of like a last resort. I would, depending on, again, what the property condition is, and if we could get a sense of that, I would want to create another note for a new buyer once I got the property back. So right there, you have three exit strategies. Could we come up with another one? I'm sure that we could, but as long as we have three and we know that each one of those are profitable, again, based on, our investment to the value and what's going on with the property, we feel comfortable because we've already mapped out worst case scenario. Worst case scenario is I'm getting it back, maybe have to spend a couple of extra dollars to do the foreclosure and get the property back. One other thing that we probably want to check too, Louisiana, what type of foreclosure state? I think they are judicial. Um, where is that map? I have it somewhere. We used to have a map that showed every one of these, what type of state it is. But if I'm not mistaken, let me just do one other search. Is Louisiana a judicial foreclosure state? Yeah, okay. So Louisiana is a judicial state. So sometimes in a judicial state, um, foreclosures can take longer. Again, we would have to, as part of our second level of due diligence, is kind of figure out, or even I would say in the first part, not even before we get to the second part, we want to reach out to a bankruptcy attorney. I mean, not a bankruptcy attorney, a foreclosure attorney in Louisiana, and ask them, what is the process like now? I mean, are you looking at 12 months? Are you looking at 6 months? Are you looking at 2 years to foreclose? What is their, what time frame are they looking at? And you'll get a sense and they'll tell you how much it costs and everything like that. So uh, maybe you don't necessarily have to go through a lengthy foreclosure on this. Maybe we can go to the seller, or I mean, I'm saying maybe the owner that's in the property. We could ask them for a deed in lieu. They can sign it over or something like that, where we don't have to go through that long process. So this is something that we would have to consider based on, that we didn't receive a payment, it looks like, for about 2.5 years. So there are some questions that, we need to kind of figure out and find out on this one. But this is kind of looking like, especially if I was somebody that had between $5,000 and $10,000 to, get started in note investing. If I had, an IRA or, something like that, I would use the funds to potentially take down this deal and do this deal, because if it's in my retirement account, I'm not looking for the money until down the line. And the upside on it is pretty good based on this initial due diligence. So, that's one that we found, and we wanted to just, like I said, kind of go through that and break it down and show people, kind of how we look at these deals and how we're making decisions and where our decision process where our decision process is when looking at this based on a number of different factors. But you know, I'm intrigued by it and would want to, you know, take the next step to kind of get some of those other questions answered, reach out to the note seller, see if I could, you know, see if I could see the paperwork and see if we can find out some more information about it. But the upside on it, because of the value of the property, is good. So that was the, you know, what we wanted to do today. I'm not going to do the other seller finance one on this one. I'll do that one the next time we come on, which will most likely be Monday. I'll save that one for Monday, and I'll usually, you know, try to be here at between 8 and 8:15 at least 2 to 3 times a week to either answer questions on Instagram. We'll answer questions, and then if people are on the Zoom, you know, we'll answer questions there as well. So you can, you know, just continue to look out through the social media on Facebook and Instagram at Abundant Capital Group. You know, continue to follow that, look at that. We'll post, you know, when we're going live. And we'll do, like I said, at least twice, if not 3 times a week. And we'll just continue to look at some of this available deals that are out here and go through the process of how we make decisions and how we can structure. We'll be doing more, talking about more of structuring deals when we look at, you know, the seller financing side, where we could purchase a property either subject to, or we can purchase it cash and sell it with seller financing. We'll show how we structure deals, how they can, you know, make sense. And, you know, and that's what we'll do. We'll do that, and we'll do the due diligence piece on some of these notes that we do find. So if you have any questions or anything like that, you can always post a comment. You can catch the replay on my YouTube channel, Abundant Capital Group. Make a comment there, leave your questions, and we'll get those answered. But we'll be back Monday evening around 8 p.m., either 8 or 8:15 we'll start, and we'll do the same thing. But the next time that we do it, we won't do it on a note specifically. We'll do it on how we structure, or how we look to structure notes and go through that particular process. All right. I will talk to everybody on Monday. Have a good one.